Good morning, good afternoon, good evening, and welcome to ioRadio with your host, Adam Smith. I know it's been a while since I have put an episode out, and it's not because there's been some amazing stuff to report on. To be honest, the crypto industry is kind of just atrophied, in my opinion. But I do have some crypto-related content that I'm working on right now, and I'm working on some other shows that are going to be focusing on some other technology. It was never the intention of ioRadio to just basically be all about Bitcoin and crypto and blockchain. But this is obviously a topic that I have fixated on for a while, but it is by no means what this podcast is going to perpetually be about. I've got some stuff in the works on AI and various other technologies, as my focus has always been the ethics of technology and where those two things kind of sometimes get in conflict with each other. And I'm going to be talking more about that. Obviously, Bitcoin is a great example of a conflict between ethics and technology. So what am I doing right now? Well, right now, I am working on, as you can see here, the Bitcoin 2026 Las Vegas convention footage. I've been poring over it, and I'm working on my annual Truth remix of the footage. This may be the fourth or fifth year that I've done it. If you have not caught those other ones, you really should, because they're pretty funny. Basically, I don't invent anything anybody says. I just take their words and I adjust the context ever so slightly to make them a little bit more illustrative of what actually is happening in the industry. Anyway, I'm going to talk about some of this footage as I go through it, just because it's pretty hilarious. It's very much of the same stuff. You know, I almost contemplated whether or not I was even going to do one this year, because I just feel like everything is just so boring and repetitive. Even a lot of the mainstream media is kind of bored with the same narratives back and forth with Bitcoin and crypto, and I am too. There's not really anything new. So it feels like you're beating a dead horse. You know, a lot of the crypto journalists have now kind of moved on to focus on AI and things like that, which is probably a better use of their time. Anyway, I am going to comment a little bit here. Maybe this will turn into an episode, maybe not. We'll just have to see. So poring over this footage has just been beyond tedious. And I keep asking myself, is this worth it? Do I really want to do this again this year? And then I'll come across stuff like this.
I've also found out that you are a Bitcoin astrologist.
Yes, that's correct.
Can you just begin to tell me what that is?
So Bitcoin has a time and place of birth, right? January 3rd, 2009, Satoshi Nakamoto mined the Genesis block of Bitcoin.
These are the people that you guys want to trust with your financial future. Remember that.
You can do an astrological analysis on that the same way that you do, whenever you meet a girl and she says, can you text your mom for your time and place of birth? I need to know something.
Yeah.
You can do the same thing for Bitcoin, right? So it's actually a huge topic amongst astrologers, is doing the astrology of Bitcoin, because when you look at Bitcoin's natal chart, its astrological placements, you realize, oh my God, this thing is a fighter. This thing's going to make it. That's actually...
You heard it here first. Bitcoin astrology.
And you knew from the beginning, this is going to make it.
Oh yeah, absolutely.
And you're so assured. And Timo, you're seeing this, right? She's very assured of this.
And it seems like, I mean...
You can notice none of these people take her seriously. This is funny because it's like multiple levels of irrationality here. And none of them believe any of this, I don't think.
I mean, a lot of Bitcoiners would have a very great use for somebody who'd be able to look at the chart of Bitcoin and be able to maybe predict the future.
Oh yeah, I mean, and financial astrology...
He's desperately trying to not crack up laughing. That is the biggest fake smile I've ever seen.
In general, is a huge field of astrology. We actually have the first ever Bitcoin astrology panel today at 3:30 p.m., which I'm moderating. So there's many of us. There's multiple Bitcoin astrologers, and
Oh, I haven't gotten to that yet. Holy moly, there's a whole Bitcoin astrology panel. Oh, this should be good.
And we'll be talking about Bitcoin's history, going through past, price action's always the thing that people want to focus on, right? So we have some sort of price action stuff from the past, and then predictions for the future, of course.
And
So yeah, this is the future of finance, people. Astrology, they're looking up the chart of when Bitcoin was created as if it was a person, even as if the date and time you were born really does affect your future. That's kind of funny, right? Like every single person who's born at the same time is going to have the same future. Very weird.
A lot of people struggle to get their wives and girlfriends into Bitcoin. Like they're like, why don't you understand? This is hard money. This is so important to me. Try Bitcoin astrology.
There you go, folks. If you're having trouble getting your wife or your girlfriend into Bitcoin, try showing them its astrological chart.
Truly, like that might be the angle that you need to get her to see what you're talking about.
You might as well try that.
I've seen it have success over and over again.
So one of the things that probably annoys me the most when I'm going over this is just how disingenuous these people can be. For example, here's the opening presentation from this guy, David Marcus from Lightspark. And just see if you spot the glaring lie.
Every single day, 400 billion emails are sent. And we have Gmail for that. 400 billion text messages are sent. And we have WhatsApp and Signal and Telegram and iMessage for that. 10 billion payments are sent, about $5.5 trillion. And for that, nothing.
Nothing. Really? I mean, how is he going to kind of pretend that is not a bold-faced lie? You have PayPal, you have Visa, you have MasterCard, you have American Express, you have Western Union, you have M-Pesa, you have tons and tons of very well-known applications that allow payments. So why would he say nothing?
No global account, no WhatsApp for money.
That's a lie. PayPal is used all around the world, so is Visa and MasterCard. Again, who is he trying to fool?
That works everywhere.
That works everywhere. Okay, great example of moving the goalpost.
No Gmail for money.
I don't think Gmail works everywhere. I don't think WhatsApp works everywhere. I think there's probably some countries that have prohibited some of that stuff. But you could still use most of the payment apps in most places. Again, this is what I call the nirvana fallacy, where they're claiming something is useless if it doesn't work perfectly everywhere.
No global account. Not for platforms, not for people. Platforms that are at the core of the economic life of so many people.
So he's suggesting, I guess, Bitcoin transcends that. Well, that's actually false because China has outlawed Bitcoin, and that's one of the largest countries in the world. So Bitcoin and crypto doesn't fit the same description either. For the same reasons that, say, PayPal may not be accessible in a particular country, you have the same situation with Bitcoin. Yeah, there's workarounds, but it's illegal and you run the risk of ending up in prison. So there's no difference between that and a regular payment medium if you're going to say evade sanctions.
Pay out billions every year. And every dollar they send out, it hits delays, FX, fees, and recipients.
This is my stupid crypto talking point number 7, which is the be your own bank. You can send remittances anywhere with crypto, which, as we know, is a lie because 99.99% of the world doesn't accept Bitcoin as a payment medium, so you still have to convert it into fiat. And there's a recurring theme at this entire convention. Everybody talks as if Bitcoin is, quote, money, meaning, and money has a specific definition of that which can be used to purchase most goods and services in a particular community. And there's very few places on the planet where Bitcoin would be, quote, money. So it has to be converted into money, and that's where all of the banks and the fees and the know your customer stuff and the delays and the additional charges and the exchange rates and all that come into play. And they just pretend that you don't have that problem when in reality you do. And I just find everything about this narrative that they promote is completely, I think disingenuous is not harsh enough of a word. This is just lying propaganda.
It's clear now that big platforms and people can use digital assets like stablecoins in no fear of being, persecuted.
Okay. Just more and more lies, right? You can use Bitcoin with no fear of being persecuted. I mean, it's an immutable public ledger, right? So if you're violating sanctions, your evidence of transferring value to a party that may be restricted and illegal to send value to is recorded there. So you could still get in trouble. Each and every day, people get in trouble because the crypto that they're sending has come from dubious sources. There's blacklists all over the place of wallet addresses. So this guy pretending that as soon as you move into the realm of Bitcoin, nobody can touch you is completely, completely false. There's another stupid crypto talking point. I believe it's 18. I have to look. It's the one about censorship and seizure.
Like I have in a past life. Mm-hmm. 2, wallets have changed in a pretty profound way. And that's true now more than ever. You can now log in with Gmail, with Google, with Apple, with the phone, with passkeys, and never fear losing your funds again.
That's obviously
3rd, we built...
You look at the terms of service of any wallet application, and I guarantee you it will say we are not responsible if you lose your funds. So for him to say there is no fear of losing funds, go check the terms of service of any of these apps. They're not going to guarantee that something doesn't happen to your funds.
Spark on top of Bitcoin. And Spark is a layer where most of the most successful Bitcoin wallets are building on, but it's also, in my opinion, the best network for stablecoins.
And of course, we maintain that stablecoins only exist to facilitate money laundering. There's no real reason to have them. They're designed to get around existing banking regulations that track illegal activity involving payments. So, again, just because there's a few crypto-friendly administrations that are looking the other way when all of this money laundering is happening doesn't mean this is the way it's going to be in perpetuity. At some point, things will change because you just can't have rampant criminal money laundering happening. That will be clamped down because ideally most people want to live in a relatively rampant crime-free society. And if there's a way for people to launder criminal proceeds without any kind of repercussions, that's going to definitely ramp up criminality. And I don't think people want that. Okay, this guy has an example of his superior wallet thing. Let's pick it apart and see what we're going to deal with here.
So let's dive in and let me show you the product and the way it would work. This is the Grid Global account of Barbara. She lives in Mexico. She's a creator. She gets paid by a US platform. She just got a $5,000 payment from this American platform in real time, 24/7, lands in her account. Now let's dive into all of the ways that she can spend that money. I'm thrilled to announce a landmark partnership with Visa. And this landmark partnership is not a small one. Lightspark is becoming a principal member of the Visa network. And so what does that mean? That means that Barbara now can spend in 33 countries, soon 100 before the...
Okay, so his global spendability of this is dependent upon an already pre-existing network that he, in an earlier segment, said did not exist. You see how completely disingenuous this is? And look, it says 33 countries now, but 100 countries by the end of the year. So he went on to say that he was promoting something that could be used everywhere, and now he's admitting there's only a handful of countries that it supports and that he's working on more. So again, this is the thing that just the bald-faced lies, the complete audacity of him to say one statement and then completely contradict it a few moments later. And for an audience to eat this up and not be like, wait a minute, you just contradicted yourself, I find that to be just incredibly concerning. Anybody with half of a brain is going to let somebody like this get away with that without calling into the fact that he's just contradicted himself and just said some lies. I don't get it. I just don't. Well, I mean, this is par for the course. I mean, everybody kind of lies to each other in this industry.
For the end of the years, before the end of the year. And she can spend at any of the 175 million merchants available on the Visa network globally. She can buy a coffee, done.
Not with Bitcoin.
She can also
It's
use
all with
the
money.
card number to go buy things online as she needs it.
And you could bet that there's going to be additional fees and exchange rates and all kinds of stuff like that. This looks to me like just another person paying to use the existing Visa network, another exchange that will allow people to, bridge crypto to fiat, crypto or stable coins to fiat. So you can bet there's going to be tons of extra charges and additional delays and other restrictions. I guarantee you there's restrictions in terms of how much you can spend in what time period and all this stuff. Every time I've looked at one of these kind of crypto payment gateways, it's 10 times worse than just using a regular credit card.
But what if she wants to move money to her bank account? She lives in Mexico. Her account is in Mexican peso. No problem. She can do that too. Real time, because Grid Global accounts live on LightSpark Grid that we've been building for the last 4 years. So she can move that money on a Sunday at 2 a.m. to her bank account as she needs it.
But she's still subject to all of the policy rules and restrictions of her actual bank account. He's going to pretend that doesn't exist. He's going to pretend there's not KYC stuff, there's not fees or exchange things or delays or anything like that, when there really is.
But it's not only working in Mexico. She can also send it to any of the 65 countries and soon to be 75 countries.
Oh, 1 minute he's talking about everywhere. Now it's 65, soon to be 75 countries. Again, completely contradicts what you said earlier.
Countries that Grid reaches in real time. So that global dollar account.
What percentage of the countries that Grid reaches does Visa reach? Probably 100%, obviously, but how many more countries does Visa reach? Why even use your little thing? They're just another crypto exchange offering a crypto credit card using somebody else's network. Now, they've got their own network on their side, but nobody really cares about that. If you're spending money, you don't care what networks you're using. You just want to spend the money and you want to do it efficiently.
Enables her to have access to all the payment systems in all of these countries. But what if she wanted to send money to someone on another network? Let's say someone has a Solana wallet, their choice, and they want to receive USDC. That works too. Because $1 on a Grid Global account is $1 on any network.
$1 is $1 on any network. They've already acknowledged that they don't have access to every or any network. So that's another lie.
So it can move to USDC on Solana or to USDT on Optimism. It works.
It works on the select networks that they've been able to peer with. It doesn't work on other ones, but yet you say any and all as if they do. So there's a conflict there.
And of course, because Grid Global accounts are built on Spark, it supports Bitcoin out of the box. So she can buy and sell Bitcoin natively inside of her Grid account.
Yeah. And what are the fees for that? Is he going to say? Is he going to say how the exchange rate varies? If she's going to spend money to buy Bitcoin, she's going to be spending fiat or some other currency. And there's going to be a spread exchange rate. And this is one of the things that you don't hear about. Whenever you're buying Bitcoin or selling Bitcoin, there's a spread exchange there. And it's almost never going to be what the current market thing is. It's always going to be some variation of that with an additional pad added that benefits the exchange so they make money on the transaction. They can claim, oh, there's no fees. But then they bump the spread exchange rate up so that it favors them in the transaction, and that's where they get their fees. But most of them have fees as well as that exchange rate, which is almost never going to favor you, the client. It's going to always favor the exchange. Is he going to talk about that?
And the beauty with that is that because this account is on Spark, Barbara has one wallet address that supports both dollars, or any other stablecoin for that matter, and Bitcoin.
This wallet address they're talking about it's not self-custody. It's going to be something that the company controls. So therefore, that whole not your keys, not your coins thing applies here. That account could be frozen or seized at any moment with no notice for probably any reason. And I've spent a lot of time looking at the terms of service of these kind of companies, and there's almost always something like that in there. Okay,
it's not.
See why I can only deal with so much of this before my brain starts to kind of turn into pancake mix. Okay, so here's another thing. Check this one out.
So you'll never be a tenant of someone else's network by building on Bitcoin.
This is another thing that really, really bothers me, is this claim that once you use Bitcoin, you're not on anybody else's network. It's just, again, patently false, right? Bitcoin is a tenant on multiple networks itself. The internet, your local providers, cellular companies, all of that stuff. Those are all permissioned networks that you have to be granted permission to use. They're not raining down like sunlight from the sky that you are free to be able to access. Those things are maintained by private corporate special interests as well as government, centralized government. And either of those two, either the corporations or the government, can pull the plug on you at any time. They can revoke your access anytime they want. So this notion that if you use Bitcoin and you don't require permission from anybody, that's completely false. Now, they obviously take for granted that the network will always be available, but we've seen time and time again that is not true. So again, this is more being disingenuous, pretending that, assume if you take out the internet, yes, it is permissionless. Again, it's just disingenuous and it's lying. So one of the things that we see constantly in the world of crypto is how the narrative changes over time. Bitcoin was originally P2P cash. Then it became, great for buying dark, products on the dark web. And then when that all fell through, it couldn't scale. It was, it was supposed to be the payment thing that everybody was going to use instead of money, and it failed. Then it was rebranded as digital gold, a long-term store of value, blah, blah, blah. Invest in it. And the narratives constantly change. One minute it bypasses the government. The next minute it's like, oh my God, the government is using it. Isn't that awesome? 1 minute, we don't care about what the government does. Our stuff bypasses it. And then the next, it's like, we need regulatory clarity from the government. We need the government to pass special law, but just all over the place. So here's another new narrative that is, that whole, if you can't beat them, kind of align with them. Now Bitcoin is not pretending to try and replace money, but it's pretending to try and replace collateral. I think we saw this in the 2008 recession, where they created real estate and turned it into securitized mortgages that nobody could do due diligence on, and then just hyped it up and the whole thing collapsed. Well, the crypto bro people want to do the same thing with their tokenized asset thing, where they take real world assets. That's a whole nother narrative. And then there's this new narrative, which is using your Bitcoin as a treasury, as collateral. So get ready.
Most pristine asset collateral we've ever seen, and you made the right move. You bought it. You own it. That's the good part. The bad news is almost everybody in this room is still going to lose the game. Not because you didn't buy the right asset, but because you're using that asset in the old fiat system. And you're playing by an old set of rules that no longer work.
Really?
Now,
when did fiat not
the personal
work?
treasury, where's my side? The personal treasury is the answer to this. It's a way that we can take Bitcoin and build it into a system that can build wealth for the rest of our lives and for future generations. It's so that we can pass down not just an asset, but a system.
So apparently the new narrative is buy and hold. Never, 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 ever sell your Bitcoin, because obviously the only thing that matters with Bitcoin is the price. So if you can convince people to just buy it and never sell it, theoretically, due to its limited nature, it'll continue to go up. But if you're just holding Bitcoin and you're not spending it, then what is it doing for you? Well, this is the newest invention that they've come up with. Is it's a treasury. It's a form of collateral, and you will borrow money against it. So here's another part in this presentation, and this is just a great example of a really common logical fallacy called post hoc ergo propter hoc, which is also known as a causal fallacy, commonly addressed as correlation does not equal causation. So here we have this guy is going to basically try to tie everything that's been going wrong with you and your ability to not be a millionaire with a particular thing in time, which he wants to then say Bitcoin fixes, which there's neither evidence of that. But let's listen to this, because this is really just egregiously absurd, and I'm going to explain a little bit. I'm no expert in this, but I'm going to offer an alternative explanation to his that is a lot more realistic. So let's hear.
Exactly as designed. Again, 1971, where the arrow is, you can see the line going down there. And you can see since 1971, the top 1% of earners have seen their wealth go up and up and up at a parabolic rate, while everybody else, the bottom 90%, have seen their wages stay flat.
Okay. So let's assume that this graph is accurate, and this is your bottom 90%, and their income growth is going up, and these are the rich people, and their income has kind of been relatively flat, and then right around here it starts to go way up. So the first thing we want to do is, he has not explained what has caused this income to go up. You could say it could be the war, post-war boom with all the manufacturing. That is true. That probably definitely contributed to it. But also, this is where labor unions were incredibly powerful, and workers' rights were very important. And it's also a period where the top marginal tax rate on the richest was up to 90%, right? So post-war, rich people were taxed at outrageous rates, which basically prohibited them from really becoming billionaires. They, that was our policy. Now, he's trying to tie this all to 1971, which is when he claims the United States left the gold standard, and that caused everything. This is a really egregious causal fallacy there, because you can see that even after they left the gold standard, look at how it dropped down. It wasn't until close to 1980 that it started to go back up. The rich people started to get richer. So what happened really around 1980 that would cause the rich to get richer and then the lower classes to kind of just stifle? Was it really going off the gold standard? Absolutely not. Among other things, there were a number of things that happened. This is when Ronald Reagan got elected, and Reagan did one very important thing. He promoted a concept called trickle-down economics, which was, let's cut taxes on the rich, and then that will stimulate the economy because they will have more money and they will spend it, and that will create jobs. That was what he proposed. Even fellow Republicans like George H.W. Bush called it voodoo economics. It didn't make any sense. And now enough time has passed that we know it completely failed miserably. It didn't stimulate the economy. It didn't make the middle class richer. What it did was it made the rich richer. And ever since 1980, this is a pattern that the Republicans have embraced. Cutting taxes on the rich, not supporting an increase in minimum wage or anything like that. So what you see here is a fundamental change in the U.S. economic socio-policy here that happened not in 1971. It actually happened right around 1980 when Reagan took office and started doing that. He also did a couple of other things. He gutted unions. He was notoriously anti-union. He was anti-socialized medicine. He was actually an employee, of General Electric, which was vehemently against socialized medicine because they were making a fortune in the medical field. And of course, they're also making a fortune in the war industry. And so Reagan got into a whole bunch of other conflicts that was a boon to people in the military industrial complex and the healthcare industry and all that. He didn't do anything for healthcare. He threw millions of mentally ill people out on the streets, created the homeless problem, ignored the AIDS crisis. All that kind of stuff happened during Reagan's watch. He also eradicated the fairness doctrine. This is a key piece of policy that kept the media honest. I don't know if I've ever done anything on this, but the fairness doctrine basically said if you have a broadcast license, you have to show news that's of interest to the community. You can't censor stuff, and you have to give equal time if you start putting editorial on there. You got to let other people have their contrary viewpoint. This is what led to younger people don't have any idea, but it used to be editorial was confined to a very tiny area at the end of the news program. And if you disagreed, you could go on the air and state your alternative thing. Reagan got rid of that, which paved the way for this AM hate radio that promoted right-wing ideology, which just so happened to align with the interests of lots of powerful corporations. So that ushered in an era from 1980 onward of deregulation of corporations, reducing rich people's taxes, making it easier for corporations to dodge their taxes. For example, corporations were not able to buy back their own stocks until the 80s. The Republicans repealed that restriction, which allowed corporations to manipulate their share price. And there's just tons and tons of examples of things that happened from the 1980 onward, which was basically when the Republicans kind of just generally got control of everything. There was only a tiny little sliver of time from then to now where the Democrats really had any power, and it was very fleeting. It was never enough to get past a filibuster. They never had a supermajority. The Republicans pretty much controlled legislatively what happens, and any progressive legislation like raising the minimum wage or stuff like that was just shot down. It was shot down by the Republicans. So this is what contributed to the stifling of the lower classes. The minimum wage had not changed. Corporations were getting deregulated. Prior to this, we would break up monopolies. Like the telephone company got too big and we broke it into small little baby bells so that this is what allowed more competition. We probably would still be paying by the minute to talk on the phones if it weren't for the government breaking up those bell things and causing more competition. Of course, what did the Republicans do in the 96 Telco Act? Them, as well as Bill Clinton, signed into law some deregulations that basically allowed these corporations to reconsolidate and consume each other again. It was all under the guise of more competition means lower prices. Everybody's cable bill is going to go down. That didn't happen. It was all a big fraud. So he's trying to tie this all to 1971, and I could give you a laundry list of dozens of things that have happened since then that have made the rich richer. What do you think has made the rich richer? Being off the gold standard or cutting their taxes, which is significant. Top marginal tax rate prior to this was in the 80-90%. And then and now it's way down. It's its lowest point almost ever. So this is what I find really annoying is he's trying to tie everything to this one point in time, and you can see it doesn't even correlate with what he's trying to suggest.
They're not smarter than you. They're not luckier than you. They just understand how to play the game differently. So let's take the Cantillon effect and let's flip that upside down and let's lay out the...
Look at his AI image. It's just garbage. It doesn't even make any sense. Like, these guys didn't even proof the crappy AI images that they use. It's just fake text here. That's just completely absurd. This is how much research they've done. They can't even proofread their own slides.
Cantillon playbook. So the Cantillon playbook is using two things. The Cantillon effect, which I've already explained, new credit creation and money buys assets, pushes those assets higher. But that sits inside of...
Again, this new money creation. He's tying everything to monetary inflation. We know, ask any economist that is relatively credible. He's going to tell you that monetary inflation is not really the main cause of all of the high prices. It's stuff like fuel prices, conflict, supply chain issues, corporate monopolization of markets, all kinds of stuff like that. As I said before, if monetary inflation was really causing high prices, we'd all have a lot more money. If there's a lot more money in circulation, all other things being equal, we would have at least some higher percentage of that money, and we don't. It's all going to the rich. It's not because there's too much money in circulation.
Of this macro loop. Now, you've heard Lynn Alden says that nothing stops this train, which means the governments can't stop, won't stop. They have to continue printing more money to continue expand. And so as the deficit...
Again, the government is certainly being fiscally irresponsible. There's no doubt about that. And we need to address that. We need to address deficit spending, but Bitcoin can't fix that. And it's just completely absurd that this is a line of reasoning that he's trying to present to people. Of course, I think this auditorium is largely empty, which is one of the reasons why you never see shots of the audience during the 2026 convention. It seems like, from what I've heard, hardly anybody showed up.
Deficits continue to get bigger and bigger. As they have more and more debt, they have to push the cost of that debt lower and lower. So then rates go down. They need the debt to be cheap. It's one of the reasons why the Trump administration is so bent on getting rates down, not to save the economy, to make it cheaper for the government to manage the debt. Now, when they borrow more money and push the rates down, then inflation goes up, but it does two things. Number one, it destroys the real value of the existing debt. So all the people that took the debt, it all gets destroyed through inflation. And at the same time, it pushes asset prices higher.
I'm not an economist. I don't really want to comment on much of this. I have a feeling, though, that this guy is grossly oversimplifying a very complicated thing that's going on here with debt and inflation. And again, when he refers to inflation, he's conflating two different types of inflation. He talks about inflation in a general sense, meaning everything is expensive, right? And then he also talks about inflation in terms of monetary inflation. And he suggests that the two of them are the same thing or exactly directly correlated or, to each other. And the truth is that, as I've mentioned before, the causes of prices being high are many, many, many. Wages are stagnant. There's many, many causes for that. The price of goods are going up, up, up. There's many, many reasons for that have nothing to do with how much money is in circulation or what the national debt is. The national debt does affect a lot of different things, but this guy is just trying to bend everything so that it fits this, monetary inflation bad, monetary deflation good. Bitcoin is deflationary currency, therefore it's good. It's a really, really desperate kind of set of things that he's trying to kind of sew together. But let's talk about something else. This Cantillon effect that he keeps referencing. Again, crypto bros, one of their things that they like to do is take a common term or create a term or create some kind of techno babble and suggest that it's some kind of new kind of cool thing that they know and you don't. And if you don't understand it, that means they're smarter than you. This is another case of them fabricating something and taking it out of context and also kind of distorting what it means. So let's actually look up the Cantillon effect. And I had to do this too, So here's what it says. And this is all from the Austrian School of Economics, which generally believes in a completely free market, which has already been empirically proven to be crap, which is why the Austrian economists reject empirical data, which seems completely illogical, but that's the only thing they can do to push forward this narrative that you should just give businesses as much freedom as possible, and the invisible hand of the market will work everything out. This is all derived from that basic anarcho-capitalist libertarian belief that markets should be unbridled and free. So the Cantillon effect says when you print money, it causes more pounds to chase fewer goods, pushing up the average cost, resulting in inflation. Now, keep in mind that this guy came up with this in the early 18th century, right? So back then, we're talking about much smaller economies of scale. This guy came over to America and was involved in the very early colonization of certain parts of the French portion of North America. And so he partnered with people who set up banks, and he actually thought that, creating your own bank and using it to stimulate the economy was a doomed experiment because you didn't really necessarily, when you're printing your own money, you don't necessarily have enough to back it up with. But nonetheless, he decided he was going to profit off of this, and he bought shares of this company that he was kind of loosely associated with, driving those people kind of crazy. Again, this is another example of the libertarians laud this guy, but if you look up the history, he was murdered by people for screwing them over. So let's look up this Richard Cantillon guy. So Richard Canton was this economist, and he wrote this essay that was all about that kind of stuff. And again, I am not an economist. I'm not going to really get into that. I just wanted to drill down enough so I can get a general handle of what technobabble these guys are spewing and whether or not it really has any kind of basis in reality. So this is worth reading. I won't go into all of it. I skimmed over it. So his theory is relatively sound in that if you are producing money into an economy, you're going to create inflation, especially if that economy is very small and when you're printing money, you're producing massive amounts of it that are going into a very small economy. Absolutely. But that same thing doesn't necessarily scale up to what we're talking about with a humongous country like America. The amount of monetary inflation that's caused by printing money in America is nowhere near as significant as what it was in Cantillon's scenarios, where he basically would blow into a largely tiny little community and just inject a massive amount of new money into it by creating his own bank. And I'll be honest, I mean, even though my name is very similar to a famous Austrian economist, I really have so little interest in economic theory and all that kind of philosophical stuff. I really want to focus more on tangible real-world causes and effects than elaborate theories of why things work. That's just a different discipline for different people. I'm not that person. I want to talk about empirical data that shows clear things. Although, I mean, obviously any theory is going to have to be grounded in some kind of empirical data. But again, context matters, and that's the problem with the crypto bros, and they're referencing Cantillon and this theory of his. If we look at what AI says, it's a little bit more interesting. Let me bring that up. The AI version, which has been seeded with a bunch of pro-crypto propaganda, is slightly different. It says the Cantillon effect is an economic theory that the injection of new money into an economy does not spread evenly. Again, I would say this applies in just about any kind of resource, whether we're talking about money or anything else. There's going to be somebody at the top that is the manufacturer of something, and they get to decide how it's distributed. I don't see how you can get around that, but they're kind of suggesting that somehow crypto is different or that it's not spread evenly, which is completely false too. I mean, Bitcoin has a greater disparity of wealth among its recipients than any other monetary system. In fact, a lot of the history of like Cantillon is kind of mirrored in what's going on in Bitcoin. You know, here was a guy who didn't believe in a certain kind of economic system, but he played the game and made a massive amount of money arbitraging the ups and downs of that bank that he was associated with that was creating new money. He recognized that it was a scam, but he also recognized that he could profit from it by its going ups and downs. And so that's what he did. And he siphoned all the money out of it to the point where the people running the bank threatened him, and a lot of bad things kind of happened after that. So he was kind of a scammer that admitted it was a scam, but he was going to take advantage of it. It's kind of like, you know, crypto bros who believe that crypto is fake, but they're still going to play it because they think there's more greater fools out there and they might as well profit because somebody else is going to. Another example of the tragedy of the commons, of somebody that's like, well, somebody's going to do this. It might as well be me. So I just find the whole thing just incredibly unsavory. This guy, Richard Cantillon, that the whole thing is based off of, things didn't turn out good for him. Okay, so let's skip forward and look at what happened to Richard Cantillon. He was in London, and in 1734, his residence in London was burned to the ground, and it's assumed he died in the fire. The guy had a ton of enemies. He also had a history of staging his own death, or at least people were claim that, going under aliases because he had a whole bunch of enemies and debtors and stuff like that. So this guy did not, for how smart he was, his life didn't end very honorably, and he didn't seem to have a whole lot of friends, which seems to be consistent with a lot of the crypto bros MOs too. It just seems like these are two peas in a pod. This is a guy that recognized a market that he could make money off of. But he didn't care whether he was siphoning liquidity out of it that could have been used to make the world a better place as long as he enriched himself. But he apparently leveraged himself so much that he got screwed over as well. Anyway, it's just another example of these historical characters that crypto bros will kind of reference and try to pretend that somehow they were onto something really brilliant, and that somehow this illustrates that Bitcoin is a solution to this issue, which it's really not. Okay, now let's see where he's going with this.
The debt continues to expand. And so for us, we just need to decide which side of this loop do we want to be on. We want to be on the left side, where we're just working for wages and we're paying our taxes and we're saving our 5 or 10% stacking sats, or do we want to be an owner? Do we want to own assets? Do we want to own pristine collateral?
Pristine collateral probably is his reference to Bitcoin.
Again, Bitcoiners already made the right call. You already bought the right asset. You're ahead of 99% of the world.
Again, completely just a premise on his part that has no real empirical evidence backing it up.
But if you're on the wrong side of the system, it's still going to break down in a fiat liquidation plan. So
again, this is also kind of a false dichotomy. Like, you either got to agree with his premise or you're on the wrong side. Let's see where this premise is going.
what we want to use, we're going to build this system. We're going to use both the Cantillon effect, close to the money supply, using cheap credit to buy assets, and then we use the macro loop, where those two things combine. Assets inflated by the Cantillon effect, debt destroyed by the macro loop.
I want to see an example of how this is supposed to play out. This he talks in generalities almost always. So where's the specifics? Are we going to see any?
You don't do anything. We use the loop's energy to build your own personal treasury. And the quote by Naval says that the only real sign of intelligence is if you get what you want out of life.
Again, he's suggesting that you need to get on the right side of this cycle. How do you do that? This is all just a bunch of self-help mumbo jumbo crap. Give us a specific example. What is it that you want people to do?
So certainly we want to build this, and I want to build that world for my kids and my grandkids and your kids. The money system is broken. We know the Fed is the problem. But you can believe the system is wrong and use the tools while it still exists.
Again, what are you supposed to do that's supposed to be different and better? Get to it.
At the same time. All right, and I call this the judo move. So instead of pulling out of the system and abstaining, we want to take the energy from the system and use it against itself.
I'm wondering what it is. Is he suggesting that you mortgage your house and then buy more Bitcoin? Is he really going to go there? Huh.
Some people call it a speculative attack. I got to speed up through this. Now, this strategy has been used to build wealth for millennia. The problem is it's only been available to the billionaires because they only had enough money and assets to make it work. Think about a central bank. A central bank acquires hard assets, issues credit against the reserves, never liquidates or sells them.
So basically, he's just saying use Bitcoin as collateral, and as long as you don't sell it, you're okay. That's just completely absurd. So basically, this is the new narrative. This is the narrative that I've seen in 2026, right? Bitcoin has failed as an investment now. So they're saying, all right, it might be a little bit longer before you'll actually see a lot of money on your Bitcoin thing. But what you can do in the meantime is you can borrow against it. That way you've got liquidity. You can buy assets. You can do that. But that's incredibly, incredibly risky because these Bitcoin lending firms are just so sketchy. They can, and once you do that, use Bitcoin as collateral, they can liquidate your Bitcoin if the price drops below a certain value. This is really, really dangerous, even by crypto bro standards. And this is now what they're suggesting is don't sell your crypto, borrow against it. Yowie.
The reserves. Sovereign wealth fund is the same thing. And so we want to think about that. How do we buy Bitcoin, the best asset in history, and issue credit against our reserves and never liquidate that? Now, my grandfather understood this, and I'm sure you guys have family members that did as well. My grandfather understood that he was supposed to buy as many assets as he could. So he bought land, and he bought houses, and he bought office buildings. But then when he died, my father and my aunts and uncles sold it all. They didn't understand the system. They did what the fiat word told them to: sell the assets, get the money, spend the money.
I don't think the fiat world tells you that.
That's the fiat virus.
I think that's kids that don't want to work in the family business or that want more money for other stuff. I don't think it has to do with fiat. I think it has to do with actually, ironically, this open capitalist system that these guys embrace. That's the problem, is that you're in a capitalist economy, you're constantly convinced that nothing you have is enough and you have to keep buying more and consuming. And that's what drives this desire to liquidate stuff and have more money.
Iris, stack Bitcoin for 40 years, retire, start selling my Bitcoin. Hope I don't run out. Die with zero. All right, so we want to change this. Shoot, how fast can I go here? So the old track is earn income. The government takes 20, 30, 40%. Live on what's left. Stack 5 or 10% in sats if you're lucky, if you skip your morning coffee every day. We want to reclaim some of the money that we would send to taxes and invest that by acquiring more assets.
So basically, he is taking a page from the rich people's playbook, which is if you have assets and you sell them, that's a capital gain. That's taxable income. But if you have assets and you use them as collateral and you borrow against them, that's not taxable. This is a loophole that really shouldn't exist, at least for rich people, because it's how they get out of paying taxes. If you own a whole bunch of stuff, rather than selling things to give yourself income, you just borrow against it. And if you got a low enough interest rate, you save money by the interest is lower than the income tax that you would pay. And that's just a trick that the rich people use. Now they're suggesting that Bitcoiners do it as well. But the problem is Bitcoin is such a volatile asset that you can end up having everything liquidated. It's incredibly dangerous.
We want to use those assets collateral to issue credit like a central bank. And then that funds our lifestyle and liquidity to, again, buy more assets. Let's take a look at this. So do
you really think the average crypto bro has enough crypto to where he can replace his income with a loan using Bitcoin as collateral? I don't think so. I don't think that's really happening. I mean, you have people like Michael Saylor doing it, but he's leveraged himself to the hilt. And if Bitcoin doesn't keep going up, he's going to be in really, really bad shape. So this is just a really incredibly bad piece of advice. But then again, this is the Bitcoin convention. This is what you get when you go here, is you get people telling you, keep buying this thing that doesn't do anything for society, that has no intrinsic value. It'll make you rich. Now they're saying, don't sell it. Please don't sell it, because people selling it are making the price crash. So they're just coming up with more and more creative ideas to keep people from selling their Bitcoin so that it doesn't crash more, because nobody wants it. People are done with it. Aside from a few people and companies here and there that are profiting off of transactions and fees and exchange rates, the vast majority of the world couldn't care less. And now they're really, really worried. So their latest scheme is don't sell your Bitcoin, borrow against it. So there you go, people. This is the crazy stuff I have to kind of weed through in order to try to put this little funny reel together. But it's a lot of it is just really, really depressing. And I'm sad. I'm sad that so many people think this is a realistic way to create wealth or value. It just saddens me. Anyway, let me know what you think. Leave something in the comments. And I've got some more stuff coming soon. If anybody is interested in talking about stuff, reach out to me, adam@ioRadio.org. I'm looking for some people that are experts in AI. I want to talk with them about the technology and the potential as well as the pitfalls. So if you have got some interesting stuff and you're involved in something interesting, please reach out to me. And until next time. Once again, I want to thank everybody for tuning in and listening. And be sure to subscribe to both the YouTube channel as well as our podcasts, which are on all the major platforms: iTunes, Amazon Music, Spotify. Just search for ioRadio and you should be able to find it. Or you go to the website, ioRadio.org. You'll find links to all of the podcast platforms and everything like that. And be sure to visit the YouTube channel. It's YouTube/American Scream Video. You can find a link to that at our main site, which is ioRadio.org, or the site for my documentary, which is called Blockchain Innovation or Illusion. That's at blockchainii.com. And again, thanks very much for your support. And if you would like to appear on the show, or you want to debate, or you want to discuss anything, email adam@ioRadio.org.